Alright, welcome to our weekly update on Australian property market. We run it from the sunny climes of Queensland, where by definition we discuss waves, impulsive waves and corrective waves around Australia. The forecast for this week according to SQM is Sydney flat, Melbourne flat, Brisbane up. So why are we here? Because interest rates are up for the 12th time and we want to know whether there is more rises to come. How US bonds are going to affect property prices and the broader economy. Last week I announced that we have reached a milestone in Sydney's property market. I thought that despite the abysmal news and ongoing increases in interest rates, there are already suburbs that had started the final fifth wave within the larger final wave. Have a closer look how monumental this shift could have been. We're talking about a cycle that spanned over the last 50 years. Here's wave 1, wave 2. The third wave ended with the banking crisis of 2008, which resulted in wave 4. Now we're in the middle of wave 5. Our interest rates are correlated with the 10-year US bond yields that are having a bull run, which actually is a bull trap, as it is a part of a larger correction that started on the 25th of October last year. It needs to undergo another drop in order to complete wave 4. That will correlate with the incoming spikes in stocks and gold. It won't have much impact on our interest rates as it's going to be short-lived. In my opinion, the next few weeks will give us some spectacular increases in all sorts of assets as the US bonds complete wave 4. Having said that, once US bonds start a new wave 5, that's where we should expect another rise in interest rates, maybe 2. That will tank stock markets and cause further drops in house prices in Australia. It will complete wave 4 in a property market. It's going to be painful to watch. Then we need to wait for the 10-year bonds to reverse. Once they go into a full swing correction, you should see a reversal in the broader property market and the beginning of the final wave within the larger fifth wave. My guess is we're going to have about 2 weeks of drops in the US bond yields, perhaps till August, then a dramatic spike in rates. How will it affect our interest rates? It may happen with some interruptions since interest rates are being set by a Politburo of RBA that just announced they're getting a new chief. That could give them a perfect excuse to increase rates twice before September, since Philip Lowe is already a sinking ship and will always be associated with skyrocketing interest rates. However, a new governor is going to calm the public down, bringing only the good news. Month by month she's going to lower interest rates or put them on hold, and that's until US bond yields hit the bottom of wave 2. Then all bets are off. Inflation is going to go through the roof, and so will interest rates. So whatever pain we felt for the past year, that is just an introduction to an insufferable 2024. Just after the November elections in the USA. I wonder whether banks are going to be keen on fixing interest rates around that time. So the premise of my video was that the Sydney suburbs have already started a reversal into the fifth wave. It was based on some spectacular spikes that broke previous highs around places like Byron Bay, Manly and Mascot. Well, it turned out I was wrong. And it made me do more research trying to find patterns and correlation between different suburbs. My initial thesis was that Sydney postcodes are more advanced on the timeline since the investment capital flows to the most attractive places. However, I couldn't find such correlation. Some ritzy suburbs start new waves up earlier, others don't. So what explains the latest spikes in house prices around the North Shore and places like Bondi? In order to see particular waves, we must take a more granular look at the individual suburbs, as if taking a magnifying glass to analyze a photograph pixel by pixel. For that we switch to the SQM website. As the research gets updated every week, I'm going to regularly post updated prices. So make sure you like this video and subscribe to the channel, as I've got more good stuff prepared for you. Okay, here it is, Sydney suburb of Bondi, 2095. Again, we start at the beginning of 2010. The first wave ended here and in relative terms tripled the prices. Third one ended here and again almost tripled the prices, resulting in wave 4 stretching all the way to today. The way it looks to me is we need to retest the low of 3,083,000 before we can start a new fifth wave, which is what just happened. I was misled by recent spikes in places like Manly or Byron Bay, which indeed indicate that we broke previous highs, but there are still closing wave 3 rather than starting a new fifth wave. That's why I was waiting for the latest data from SQM before launching this video to get a confirmation that the fifth wave hasn't started. The conclusion is there is no correlation between Manly, Bondi nor Mascot. They all run at different speeds and none of them have started the fifth wave, although Bondi is the closest to achieving this goal. As usual, apartments seem to be behind in the cycle. The first wave ended here, second here, third one here, ending with the fourth wave. We are in the middle of the fifth wave. I would expect a major spike within the next few weeks, as by inverse correlation houses are bottoming. That would conclude wave 3. Then as houses start picking up, we are going to see a drop in apartment prices. A perfect setup for arbitrage if you have a handy $3.5 million and nerves to buy and sell every 6 to 10 months. So I would like to end this video on a positive note. I can see interest rates dropping in the fourth quarter. We just need to watch in pain the diminishing wealth as the pie we all share is dwindling over the next 2 months, as more interest rate spikes are on the cards. Just be patient and count waves.